Getting a mortgage and affording a home is getting harder and harder. And the White House just recently came out with a crazy idea. Let's do a 50-year mortgage. Well, let's talk about that. Let's decide ourselves, does this really make sense? First of all, a lot of people are saying, is that even a real thing? Was it really something that they were seriously considering? I don't know. What I can tell you is that there's a lot of conversation, and I want to make sure you're getting good information. So first and foremost, a 30-year mortgage has been the standard for a long time, but we've been doing 40-year mortgages for at least a decade. So extending something longer than a 30-year is not something new. The problem is 40-year mortgages came with such higher interest rates that it just plain wasn't worth doing. And so what we're looking at now, though, is we're looking at Fannie Mae and Freddie Mac are overseen by a department called the Federal Housing Finance Administration, or the FHFA. And Bill Pulte, who runs the FHFA, is the one that came up with this idea and told Trump, hey, yo, bro, Trump, I want you to think about doing a 50-year mortgage. Force Fannie Mae and Freddie Mac to do that, because that way people can spread their price, their payment, over a longer amount of time. This will solve the affordability problem. Well, will it? So here's the deal. The first question is, will Fannie Mae and Freddie Mac even buy it? We don't know, because Fannie Mae and Freddie Mac are not owned by the government. They're overseen by the government. But more importantly, Fannie Mae and Freddie Mac don't ultimately own the debt. They sell it to Wall Street. They sell it to investors, to corporations, to individual people who buy into these bonds. Will they buy 50-year mortgages? Who knows? I'll tell you what, some buyers love the idea. Why? Because they think they can get a significantly lower monthly payment. But there's a lot of concern about, are you even getting the whole story? Now, this definitely could open up the door for some additional first-time home buyers, but I don't think it's as great as what you really think. There's a lot of hidden costs involved here. The first thing is, what's the interest rate going to be? Because I want you to think about what has been historically the two most common mortgage terms, and that's a 30-year and a 15-year. 15-year loans are about 0.5% to 0.75% lower in interest rate than 30-year loans. Why? Because the investor is getting their money back sooner. It's like if I said, hey, loan me $100, I'll pay you back tomorrow. Great, I'll just give me the $100 back tomorrow. Loan me $100 and I'll pay you back in 5 years. Yeah, dude, I probably want a little more back than just my $100. I want, the longer you take to pay me back, the more I want in interest, because it's more time I've lost in usage of that money. Well, that's kind of how investors look at this. And so if we took just a 30-year loan on a $300,000 home at a 6.5% interest rate, compared with a 50-year loan on the same $300,000 home at a 50-year loan. So if we took 6.5% as the interest rate, whether it's 30 or 50, you would save about $280 a month. Most people are like, man, that's fantastic. $280 a month is amazing. But if the rate's 0.5% higher, you'll only save $120. So is it really worth adding almost half again, doubling almost the term of your loan simply to save $120 a month? Because the rate will be higher. Because Wall Street says, I'm not getting my money back anywhere near as soon. And then there's one more piece, which is that the person who's taking out this loan is going to be considered a higher risk buyer. Why? Because otherwise you'd take out a 30-year. So it's called adverse selection. We are basically, you are standing out and saying, hey, I'm probably not your most confident buyer, because I need more time to pay back my mortgage, and it makes you look different than the standard buyer, and therefore you're saying I'm a higher risk buyer, which means they're probably going to charge you an even higher interest rate, and that will negate the benefit of a 50-year mortgage. So let's pretend they can do it at the same interest rates. The big problem is, number one, you build equity slower. You save a little bit of money per month, but in 30 years, you still owe more than half of your balance, and it only saved you a little bit off your monthly payment. Now, a lot of people argue, well, John, I'm not going to keep it for 50 years. I'm not even going to keep it for 30 years. I normally keep my loans only for 3 to 5 years. That is a very, very true statement. But even in that first 3 to 5 years, you're going to build a whole lot less in equity, and you're going to spend, if you kept it for 50 years, hundreds of thousands of dollars more in interest. Now, the truth is, I don't like this explanation, because nobody keeps their mortgage for 30 years, let alone 50. And guess what? 50 years from now, you're not going to be in this home. Now, there's a weird stat out there right now that says the average first-time home buyer is 40 years old right now. I think that's a lie. Okay. It was a poorly done survey that now everybody's quoting it saying, oh my gosh, the average first time home buyers move from 30 to 40 years old. I don't believe it. Okay. It is not true. But the survey results from the 1,000 people they mailed it out to and the 100 people that mailed back the survey results said, oh yeah, I'm 35, I'm 40, I'm 45. Well, guess what? Out of those 100 people that responded, the average age is 40. But most people aren't responding, and especially the younger generation, they're not checking their mail and mailing back in surveys. And so it was a very, very poorly done survey. And so to say the average home buyer is 50 years old, 40 years old, just isn't true. But it still is a long, long time. You're not going to have this property. So does this really fix housing affordability? The answer is no. Okay. I think that Trump got bad advice by even bringing this up in the first place, because the market is not going to give 50-year mortgages at the same rate as 30. And so you're not going to save any money off of your monthly payment. And this is absolutely a complete waste of everybody's time. My take as a lender is, look, you have options already. There are fringe programs that say, hey, we can do an interest-only loan for the first 5 years. That's no different than taking out a 50-year mortgage. You could do an adjustable rate mortgage and get a pretty decent interest rate today compared to a fixed if you're really willing to take that kind of a chance. But the reality is that you aren't going to see much of a difference in cost. If you want to see what the difference is, schedule a call with me. I would love to talk to you about it. The truth is, if you're trying to find a way to make your home purchase more affordable, there are better ways than 50-year mortgages. And mark my words, it's not going to happen anyway. Thanks for listening. Have an absolutely wonderful day, and we'll talk to you soon. Bye-bye.